Hi there, I'm Ross Woodfield. Welcome to BlackRock Global's daily market update. The US dollar index pulled back from the all-time high we saw at the end of last week as the recent data out of the US was bearish overall. The market was led lower by industrial production figures which dipped from 2.1% month on month, missing the market's estimate of 0.2%. The Empire State Manufacturing Index followed suit as it fell from 7.8 to 6.9. These are some of the smaller economic indicators, but they show the market could be getting ahead of itself when it comes to the US economic recovery. And looking now at the euro, and it lifted thanks to the weaker US dollar and comments from ECB President Mario Draghi. Draghi suggested the recovery in the EU was beginning to take hold, with growth estimates being revised upwards and bank lending rates improving. Draghi attributes this to the ECB's stimulus programs over the last 12 months. He also called for governments to use the improved outlook to advance reforms that would strengthen the long-term growth prospects. And taking a look at the Swiss franc, and it continued to weaken despite dollar weakness and the stronger euro. The franc was led lower by retail sales figures, which disappointed at negative 0.3% year-on-year versus market expectations of a 2.6% rise. This is likely a reflection of the strong franc, making it considerably cheaper for people to cross the border to shop rather than shopping locally. And the dollar is sitting just above parity against the Swiss franc and is likely to stay on that side given the recent outlook for the US interest rates. And finally today, taking a look at the Australian dollar, and it's set for volatility as the minutes of the most recent monetary policy meeting are set to be released shortly. If the RBA talks about further rate cuts, then the Australian dollar could retest the recent lows. So this will be one to watch. That's all we have time for today. For BlackRock Global, I'm Ross Woodfield. Thanks for watching.